Good morning and welcome back to Almus Market Mornings. Not much needs to be said about the developments we saw yesterday, the escalatory threats, and then finally the ceasefire agreement between US and Iran for 2 weeks. There has been a big boost in sentiment, of course. Risk assets have been rallying. Brent prices went well below $100 per barrel. Yields have cooled off, and with such kind of relief rally, often there's a risk that these things may even get overextended. Today, we also have the monetary policy decision by RBI. It's been testing times for the central bank in the last few months. Weaker rupee, inflation risks from oil prices. So this would be closely watched out for their decision and projections. Good morning, JK. Apart from the geopolitics, your 2 cents on the RBI decision today.
Good morning, Swaraj. Yes, I'll come back to RBI policy. First, on the big news of the day, the 15-day ceasefire become operational between US and Iran, and led to a big relief rally across markets. And what is also important is that there is a conditional opening of the Hormuz Strait passage for ships. Now, while all this looks good, what we should note is that the ceasefire is only for 15 days, and Israel is not part of the ceasefire agreement. So Israel still has, they have not undertaken that they will not be attacking anymore. That part can still continue. Opening of the strait is conditional, and it still remains under Iranian control. So it will allow only as long as ceasefire holds, and it can be restricted or closed again immediately if there is any violation of the ceasefire agreement. So we need to note that. So while all the euphoria is fine, we should also be aware that it's all not full. Everything is not back to square one. We have a lot more ground to cover. And this was always coming despite the huge build up in the tension yesterday as the deadline 40 to 48 hours neared. Very, very, very strong and fearful statements that were heard from the US side. But to be candid, the war had almost lost its purpose as far as the US was concerned. And there was a lot of pressure globally and on the domestic side for the US to stop this aimless, attacks on Iran. So this was only a matter of time before it came. But and then, of course, till it came, there was always going to be the uncertainty. Now, another thing to note is that oil. No doubt has given the lead. As I said yesterday, oil when it falls is something real is happening. It has fallen 20%, no doubt. But unless there is a complete cessation of war, or there is a more durable agreement between the US and Iran, oil is likely to hold above 90 or at least above 80. And even staying above 80 is not some comfort zone as far as importing countries are concerned, and particularly for India also. This will be a very important thing. Now, as for the reactions, no doubt there will be relief for the yields, which had been going up consistently. Inflation expectations had risen across the countries. Even yesterday's inflation expectations from US also showed 4% inflation. Month-on-month inflation was expected at 1.5%. So, no doubt, the Fed or the monetary policy authorities will be watching how things go on from here. They are not going to turn dovish immediately. At the same time, they'll keep an eye on the economy as well, because of the impact that these high oil prices had on various economic activities. Now, dollar no doubt crumbled after the ceasefire. What I note is that dollar never really took off, even at the height of the tensions. For instance, yen never really sustained above 160 with all the talk of negative impact of higher crude oil on the Japanese economy, and no rate hike was seen in the previous meeting. All that, but still, it has come once again to low 158. Euro had only a modest correction despite all the talk about energy-related challenges for the region. Now, more importantly, dollar was not heavily bought even when the yields rose. So even the yield attraction did not lead to a big buy in the dollar. So what I'm driving at is dollar is inherently weak. The OR factor definitely gave it some safe haven support, but that support was not strong enough for dollar to break key resistance levels, and that means going forward as tensions ease further, hopefully we can see much more downside for the dollar. And for me, the signal for that would be dollar index breaking 97 levels. Currently it's already in the mid 98s. It was above 100 yesterday. So that's something that we will definitely watch out for. Now come to India. Monetary policy, decision today. No doubt, the rates will be kept unchanged. That's a consensus view of the market. But then, what the governor states about future outlook, whether there's a change in the stance to the tightening stance, also how they deal with the imported inflation then going forward is something that we will have to watch out for. There will be growth concerns due to supply chain issues on key commodities like fertilizers. As I said earlier, the ship sailing through Hormuz Strait is going to be for a temporary period till the ceasefire expires, and the normal ship sailing and supply chains will take time. So there definitely is going to be a hit on the growth because we already suffered for nearly 1.5 months. So growth outlook will be probably revised by a few basis points. Inflation outlook also, because we look at this month's inflation, it is likely to be much higher, headline inflation. Therefore, the average inflation for this quarter and then translating into annual inflation will also be a bit higher on the on the higher side. These projections will be important. At the same time, I don't think the RBI will sound too hawkish as well. They will no doubt keep support for growth in mind. One more angle is that so far the consumer prices of petrol has not been raised despite the huge rise in the crude oil prices. This is been achieved by cutting the excess duty by the government so that the oil marketing companies do not take a big loss. Now, if this continues, despite oil remaining relatively higher, there will be a hit on the fiscal for the government. Whether they continue or in due course there will be a gradual rise in the oil price, which will reflect in the inflation, is something that the RBI will have to assess. And the market will also be looking ahead to. So these are the things that we look forward to from RBI. Apart from that, there is also a sense that the medium sized industry, yes, industries which are impacted by the Gulf War due to supply chain and higher oil prices, etc. These can get some special provisions or support by the central bank through banks for for a temporary period at least till the difficult period is handled. So that's something another. And what they do on the liquidity side, they've already done a lot to keep the liquidity position ample. What is also disturbing as far as India is concerned is that even in the new financial year, we already seen more than 4 billion of outflows from FIs. Even as on yesterday, we had almost as much as 800 million of stock selling by the FIs. So that is also something that the central bank will be mindful of. There is going to be some hit on the inward remittances because of unemployment in the Gulf and possibly people also returning from Gulf. So there's going to be some definitely dislocation for some time, at least for one quarter. All this will have to be in the minds of RBI governor when he makes the projections as well as the key decisions on liquidity, etc. So a very interesting policy decision to look ahead to from the from the macro perspective. As far as the rupee is concerned, we had the rupee strengthen well before all this ceasefire because of the administrative measures that RBI brought in forced liquidation of longs by the banks. Some data says that almost 75% of the longs that the banks held in view of their offsetting position in the NDF market has now been liquidated. So some small portion is still around. But then with the positive news from the Gulf, oil price falling, there will be a sentiment change in the market as well. So there can be further selling, and we have indicated that USD INR could fall to 92 in this corrective cycle. But for rupee to get a sustained move on the appreciation side, we need other fundamental factors to change, more particularly the FI outlook for India, and whether they resume their investments going forward. That will be important. Where the oil settles eventually, because that will have a say on our trade deficit, how much impact will have on the inward remittances. So it's not like going to be one-way appreciation for the rupee despite the ceasefire news, even assuming that the ceasefire will become a permanent one. If the rupee will still be on the watch, yes, we have had the relief, and this relief will be there for some more time. But what uh, transpires in the coming days is very important as far as Indian rupee and the Indian economy is concerned. Thank you.
Thank you, JK. And globally, yes, there is a big sentiment positive due to the ceasefire that's been announced for 2 weeks. Very interesting thing which JK pointed out: Israel is not part of this. So that's one important distinction that we need to make. That it's a ceasefire between US and Iran, not with Israel being a part of this entire thing. And Hormuz remains open, but on a conditional basis. It remains under Iranian control. In fact, there are some reports that Iran and Oman will charge some sort of a toll. This is, of course, not confirmed yet, but again, so we know that a lot of things are under development and this remains conditional. But markets did have a relief rally. Oil prices have fallen about 20%. But even oil remaining above $80 per barrel is painful because there's a embedded war premium. Yields have gotten a relief. Inflation expectations had risen across countries because of the rise in energy prices. Now, that relief is resulting in yields also sort of falling. Dollar index fell after the ceasefire, and it may likely fall more if, let's say, the peace prevails, because even at the height of the tension, it could not strengthen beyond a point. So that's basically would result in some more fall in dollar index. Apart from that, monetary policy decision today for India, rates will be kept unchanged. Governor's statement will matter on future expectations and inflation expectations, and whether the stance will be changed from neutral to restrictive. All of this will be closely watched. That's it from us today. Thanks for listening. We will catch up tomorrow with a fresh round of updates.